Well, with the downturn in the jobs report today and an expected Fed cut on the way, what's the best way to play the markets? Here with me today is the CNBC Task Force to help you maximize your investment options. Brian Gendro is investment strategist with ING Investment Management, and Venita Phillips is vice president and trust officer with Kanaly Trust. Thanks to both of you for joining us today. First of all, you know, nobody predicted this jobs number, yet as I do more interviews today, people say, oh, you could see it coming, the economy's slowing down, of course we're going to lose jobs. Where do you come down? Was it a surprise or not?
It was a surprise. I don't know of a single economist that was looking for a decline in jobs. And there's some funny things about this job report. The ISM manufacturing report that came out on Monday was strong, and the employment component
How do you
was actually
reconcile those things?
I don't know. Partially, I think the problem is that there was a big decline in state and local government employment because some states are starting school later than otherwise. But that's not the whole story. The job reports were revised for June and July as well, and there's a lot of weakness in manufacturing.
Venita, what do you think?
Well, this is 1 month in isolation, and it is a weak number. But if you look back at 1992, 1993, 1995, 96, 97, there was 1 month of negative job growth in each of those years. We weren't in a recession. When we look at the rest of the charts, the economy looks healthy. The weak dollar, we believe, could be a key factor in continuing to drive strong corporate earnings as we're able to sell more products overseas.
So, Venita, you think this is a blip and it's not going to continue?
Well, time will tell. It does appear that certainly in the Houston economy, we have jobs that we can't fill. Now, it may be difficult to train a mortgage broker quickly to work in the oil patch, but this is structural unemployment, and we know here we have jobs we can't fill.
Brian, what do you think? Is this a blip, or are we going to continue down this road, maybe towards recession, I don't want to say?
Oh, I think we're going to see a weaker economy in the second half of the year than we saw in the first half of the year. I think the economy is going to do well to grow even at a 2% rate. Now, if the Fed cuts rates, that may provide stimulus to the economy, that may help the credit crunch we're in, and that may be looking for a stronger 2008.
What is your bet on the Fed, Brian?
Well, we're looking for at least one rate cut at the September 18th meeting, and the strong possibility of another one following.
Venita, what do you think on the Fed?
Well, the Fed has a dual mandate, and that's stable jobs, full employment, and stable prices. And I think this jobs report gives us every indication, just like we've been saying from May, that there are going to be rate cuts. We believe that there's going to be a 25 basis point rate cut at the next meeting, and we'll probably continue to see the Fed do exactly what they did on the way up.
Okay.
They'll be stable on the way down.
All right, let's get to strategy. How do you play it? Brian, what do you think you do here?
Well, I think one of the best asset classes to be in is the one we've been slightly overweight in for several months now, which is large cap stocks, both in the United States and abroad. Since the Fed cut the discount rate, large cap stocks have outperformed very handily. They have strong balance sheets, and they also are not as dependent on bank credit as small cap stocks.
Can you get any more specific than that?
Well, ordinarily I could, except usually we try and make a allocation to growth versus value, but we're exactly neutral on that, just because sector by sector performance has not been breaking down on clean value versus growth lines.
Venita, what do you think? How do you play this market?
We're definitely more in favor of growth than value. We believe that we're beginning to see that trend start to develop. We like technology. We like oil services companies. We like some of the industrials. We like companies that have the ability to sell their products internationally. The weak dollar is going to be huge for us.
Yeah. All right, Brian, Venita, thanks to both of you for joining us today. Have a great weekend.
Thank you.
Thanks.